Well, Heather, we're back together again. Great to be with you.
Absolutely. Always great to be with you, Joe.
Yep. Well, as always, we've got quite the little lineup, and we always follow a topical categorical formula here. So if you're new to the podcast, you know that we're going to be covering, or if you're not new, we're going to be covering current events. And then we're going to be having our TV and movie quote of the week with some wisdom we're going to glean from strange places. We're going to talk about the excellent thing we learned in the last week. We're going to try to stump each other with two truths and a lie. We're going to have our member spotlight where we have Kim Petro joining us, one of our coaches this week. She's going to talk about one of her members that she supports. And you're going to pick your favorite Woodard Report article of the week. So let's get started right away with current events. What are you seeing out there, Heather? What's going on? What should we talk about?
Yeah, so our good friend Casey Johnson has teamed up with BB Kim, the former CEO of Basis, and launched the AI Native Accounting Foundation. So this is a brand new organization where they decided we really needed to have a place where we could be talking about AI and the industry, have these honest, hard conversations, right, about AI and really its place within the industry. So, as they said, it was to have honest dialogue, shared learnings, and visible examples of what AI adoption looks like in a firm. So, really exciting stuff. And when I was reading the press release about this, lo and behold, Joe Woodard is on the board of advisors for this new nonprofit organization.
I'm just
So,
full of surprises. Yeah.
right. And so the organization's work will revolve around four pillars. So education, research, scholarships, and an awards program. And here's the really exciting thing, Joe. So the first award ceremony for this new organization is going to be where?
Scaling New Heights.
Scaling New
Yes.
Heights, right, in June. So the very first awards for the AI Native Accounting Foundation will be on the main stage at Scaling New Heights in June. So really exciting stuff.
Yeah. It's a great organization, great leadership. And I really love the fact that it's independent now. It's going to be talking about wide range of AI technologies, including general ledger technologies. Speaking of a wide range of technologies and general ledger technologies, my big news here is that BotKeeper has announced they're shutting down, and they're doing it, rather quickly. They sent out an announcement over the weekend. This would be early February if you're listening sometime other than live, and February 2026. Just letting everybody know that they would be closing down, almost immediately. Not a lot of runway here. I do know that a lot of their folks in the Philippines, what with the chatter from them on social was that they were terminated, pretty quickly. So this is not a ramp down. It's pretty much a shutdown. And there are a lot of guesses as to what's going on. I don't like to guess. I don't have anything directly from BotKeeper's leadership on it other than the letter that they submitted. If you go out to our listening guide for this episode, you'll be able to see the letter written by Enrico Palomino, the CEO of BotKeeper. What I would encourage everybody to do is not to lean into, the negative, because we don't know everything that's going on. Instead, just to kind of look at it like I'm going to do today. I'm just going to evaluate it categorically, not talk about BotKeeper specifically, but sort of the category that they played in. Scale factor, gone. Bench, gone. BotKeeper, gone. There was this whole category of first movers when it came to technology-driven bookkeeping, and they're all gone. And I know I've said this in a lot of episodes, so if you've heard it so many times, listeners, just go ahead and say, oh, here goes Joe again. But I've got this saying that if you're one step ahead, you're a leader. 2 steps ahead, you're a visionary. 3 steps ahead, you're a martyr. And, the world needs martyrs. Martyrs, they cast their blood to seed the rest of the advancement of whatever their cause is. In a lot of ways, bench and scale factor and now BotKeeper, they kind of, their blood is sort of the seed of this whole category that's now emerged, that is newer, faster, and built on an architecture that's native AI. So if you're interested, sort of where do we go from here? Well, there are 2 things to think about. One, if you look at all of those original people that I think were about 3 steps ahead. Those organizations. The only one that was playing on the same playing field as the others, in my opinion, is Pilot. Pilot is
Mhm.
still very much there. As a matter of fact, they just introduced a press release that their platform has taken a big evolutionary step forward in the last month. I just read the press release. I haven't evaluated that. Pilot is doing something interesting, though. They are partnering with local bookkeepers, and they're using the word bookkeepers, not CPA firms. So before, the whole idea was the bots are going to do the work that the bookkeepers are doing. Now they're saying that to get the job done, we need to give our bots to the bookkeepers in a licensing relationship. So if you want to learn more about that, Scaling New Heights is a great time to come. They're going to formally launch the program this spring, and they're going to be talking about it at Scaling New Heights, where Pilot, of all the crazy things, will be a sponsor. Instead of being a competitor, they're now selling something of value to the bookkeepers who are attending Scaling New Heights. You can check that out this June. But that's
Yeah.
what. Oh, and then just to kind of finish it off too, because it kind of plays into what you said, Heather. The next evolution of technologies are these native AI apps, and
Mhm.
this foundation that Casey started, it's a great place to stay current on that stuff. But if you just want me to rattle off some names that folks that'll be at Scaling New Heights, you've got Digits, Puzzle, Campfire, Realit. All of them are native GL apps. They'll be on our show floor. And then if you want to look at some of the AI-enabled apps, the work that Zoho is doing with their books platform and Xero is doing with their platform to modernize around AI, it's bleeding edge. So again, Scaling New Heights is a great place to continue, mapping the strange new world, as we call it.
Joe, the only thing that I would say about, I'm going to use the word demise of these players in the accounting space, and I've said it to you before, and I actually said it to you about PE, that, accountants that serve clients, we're a special breed. And I think what makes us so special is the heart and soul that we put into servicing our clients and helping to shoulder the burden and the anxiety of what our business clients are going through in their business. And so when you have players that enter that space that are client facing, that are purely in it for the business aspect of it, and I'm not saying you shouldn't be in it without a business aspect of it, I think that it compromises that heart and soul that you need to have a successful practitioner client relationship. And so I think trying to hand it over to the bots, and we're going to be talking about this at Scaling New Heights, handing it completely over to the bots and really making it a kind of a self-service type of service doesn't work because of the complexity and the nuances of each individual person within that organization, right? So as much as the idea is a great idea, and I think that the players that are still in the mix right now, they're getting it. They understand it has to be human first. It has to be AI enabled humans that are driving this.
Yes. And I want to add to that. And you're right, we're going to be unpacking this heavily at Scaling New Heights.
Mhm.
If you think that you can keep doing the same kind of work you're doing now and just do it faster with AI, no, that is
Right.
not the future of. And I've heard a lot of people talk about that AI won't replace accountants, that will replace accountants that don't use AI. Well, that's a nice little saying, but it only tells half the story. It will displace a tremendous amount of the work we're doing now. And if we just think, well, let's just go on and do that work, market that work, sell that work, and let the bots do the 90%, we'll be the human in the loop that finishes the 10%. That 10% is going to get smaller, smaller, and smaller, and smaller, and it's going to do it exponentially over the next 12 to 24 months. What I want to make sure that everybody, and I know you know this, Heather, I just want to make sure everybody's clear what Heather's saying here, and she can add to this, of course, too. But what we're saying as an organization is change what you're doing for the client, and then let the AI take the things you're doing now, because that will allow you to add the value over the top within your practice. The problem is a lot of people say that, and then they don't provide pathways on how you can actually provide the value-added services. So it's a nice little tagline. Yeah, use AI, and now you can provide more value-added services. But most of the people in our listening audience here don't have those skill sets, right? They've been trading bookkeeping for money, they've been trading tax prep for money, and now it's time to go out and get the financial advisory skills, the tax advisory skills, controllership services skills that you need to truly provide that value.
That's
And
right.
and that way you're responding to this disruption and you're turning it into a positive disruption rather than kind of hanging all of your future on this saying that, well, as long as I embrace the AI, I'm okay. No, you're not okay.
Thanks for that clarification, Joe. And you're absolutely right that if I hadn't come across clear, that's exactly what I
No,
meant.
you were
Is
very clear. I just want to add to your clarity because you were talking about how
okay.
important the human is. You even use the word like soul, and
Yeah.
and absolutely, because I think that's the other mistake people make too is that I'm going to go in and do the tax advisory, and I'm going to do the financial advisory, and if you don't add wisdom and
Mm-hmm.
judgment, right? And
Yes.
then I'm going to go ahead and use your word mixed in with the soul of the human, throw all those in the loop. Then you're going to just end up with smarter bots doing tax advisory and financial advisory. You're still going to be displaced. So the way to stay out ahead of these is to be intensely human. And
Yes.
I won't steal from our keynotes at scaling. Now,
Yep.
so I don't give too much away, you'll have to come to scaling to get the rest of that. It's time to move into the TV and movie quote of the week. All right, Heather, what have you been watching out there?
So, Joe, I'm just going to tell you, I've been watching some really weird stuff, and this weird stuff is not giving me many quotes for TV shows. So, I'm going to go back to an old favorite of mine, which is Victoria. I really tried, Joe, too. I tried. I'm like, can I make that into a business quote? And it just didn't work. So, anyway, I'm going to go back to Victoria, and the quote is, "What of worth has ever been achieved that did not inspire fear?" And that was
Hmm.
said by Prince Albert. And he said that in season 3. He's pitching to expand and include other countries' innovations in the annual exhibition that they do every year in London. And he's getting pushback from the board saying, we can't afford this. This is a huge investment. And there's a great line where they're saying, do we really want to have, and I can't remember, I don't even know what this is, but do we really want to have this French fabric next to our English fabric? It was kind of a funny moment in the show. And so really what he's saying here is, we have to take calculated risks and be open to other ideas because that's the key to innovation. If we are only focusing on what we're doing, right, and we don't always try to do something better and get to the next level, we get stuck, right? And getting to the next level and doing those hard things is terrifying, right? It's terrifying. But if you don't do them, if you don't open yourself up to those ideas and you don't take that risk, then you can't grow.
Hmm.
And I don't mean grow like add dollars. I mean grow as a human, grow as a business. It does
Well,
take,
it's a
you
very
have to do
appropriate
it.
quote to what we were just talking about, right? I
Mhm.
mean, what of worth has ever been achieved that did not inspire fear? Well, this whole AI thing we just talked about, it's kind of fearful,
It
and it
is.
should be fearful.
Mhm.
But just like this, you've got to put the AI alongside. You got to put that cloth alongside your cloth. So I think it's a fantastic quote to extract out of that show you're watching. So normally we're both sci-fi people and fantasy people. So we're breaking the norm here today. You're non-fantasy. I'm non-fantasy. I'm watching Landman, Taylor Sheridan's latest kind of thing. It's of the Yellowstone spirit, but
Mhm.
Texas oil people now. And there's this great quote. There's a lot of business that goes on. It's the oil and gas business. So I might extract quite a little bit out of this. But our protagonist is named Tommy, and he says to his daughter, who's trying to assess what's going on with with her mom, his ex-wife, as she's gone off the rails. She had remarried for wealth, married a billionaire, and she's kind of chased after the money that way. And he wasn't tearing her down or anything. He just said she chose the shortcut, which is always the longest road. And I thought, wow, that there's a lot of wisdom in that. You can apply that to so many things. I mean, obviously, the wrong marriage. If you use that as a shortcut to anything else, that was a long road. If you're listening and you've been there, But even apart from the nature of what he's talking about, just anything in business, anything in life. A lot of people, when I studied Grimm's fairy tales, and I read them in the original, they were cautionary tales. My favorite one is I'm going someplace with this on the shortcut thing, but my favorite one is that Rapunzel, when she let down her hair, her suitor climbed up the hair, impregnated her, and that's how they found out that she was letting her hair down, because she became pregnant. And the moral of the story is, dads, stop trying to build towers tall enough. Your daughters are going to do what they're going to do, and so are your sons. You can't protect your children. That's a really good moral of the story. We lose because we've told kind of the cartoonish versions. The whole moral of the story with Red Riding Hood was shortcuts lead to disaster. And it
Mm-hmm.
wasn't the wolf and being eaten by the wolf and all that was just the scary part. The shortcut was the entire cautionary tale. Do not take shortcuts. And here they were basically nailing that right on the head. So I would say, don't shortcut your technology decisions. Go through the full vetting process. Don't shortcut your partners that you engage with, outsourcing companies, contractors, employees. The biggest mistakes I've ever made are trying to shortcut the steps on diligence when hiring, because I was just desperate to get somebody in and they had the knowledge. If I could go back and never hire those people, my life would be so much easier. Um, so yeah, avoid the shortcuts. They're always the
And,
longest road.
and don't avoid that final review of that tax return and that
Yes.
checklist.
Yes.
Don't do
Put the
it.
quality assurance loops in everything you do, the review cycles,
Absolutely.
everything.
Absolutely. Yes.
All right. Now let's move on to the excellent thing I learned. What did you learn this week, Heather?
So I read an article on Harvard Business Review, which is one of my go-to reads, and they actually released this article like today, and they're talking about the role of an AI agent manager, and so AAMs, which they did not use that in the article, so I'm now coining the acronym AAM, which is AI agent manager. Maybe it should be AIAM. Anyway, they're responsible for managing teams of AI agents. So rather than managing a team of humans, they're managing the team of AI agents, and they monitor the safety, the accuracy, and the business alignment of the agent's work. So they're the ones that are looking at reports, they're looking at graphs, they're looking at what are the outcomes that these agents are actually doing to make sure they're aligned, that they're correct. And so right now, enterprise level companies like Salesforce and Walmart, they have these roles in there. So an example they said was a Salesforce Agent Force platform, which now they're making available to their customers, autonomously resolves nearly 74% of customer support cases. So the AI agent manager actually manages dozens of these agents. And so that's their job, is to make sure the agents are doing what they're supposed to be doing, handling any kind of anomalies that come up, making sure the data aligns. And when I was reading this, the writing was on the wall, right? That's exactly what role we don't know. We just talked about this, whether it's going to be, a senior accountant, but somebody within our firms is going to be this AI agent manager that's going to be monitoring what these agents are doing. And that's how I believe that's the firm of the future, not to steal that phrase. So I thought that was fascinating. Great article. You can find the link in the listener notes. Really interesting. And as soon as I started reading it, I started thinking of where we're going in the accounting space.
Yep. And it fits perfectly.
Mm-hmm.
So mine's also AI based. I was with Zero in a thought leadership summit last week. And then I spent the day walking around the streets of San Francisco talking to developers, getting the sort of the what's in the zeitgeist of the Bay Area right now. And my biggest takeaway I learned from all those experiences is the SaaS model as a revenue model is being disrupted. I mean, aggressively and currently. So whenever the stock started dropping and everybody was hitting their 52-week lows in the SaaS space, and I'm sure everybody's followed that story. If not, you can just go out and look at just Google for it, right? Search for it. or ask ChatGPT to build you something off of. But if you look at the NASDAQ as compared to the SaaS segment, it's underperforming by double digits as compared to the NASDAQ. And everybody's at 52-week lows. And it was because a new AI had come out that could, basically was proving this is not theoretical anymore. The bots are going to start doing the work of humans. And as it does the work of humans, this is where the real disruption comes in. If you're not following, if you think it's just old software, new software, it isn't about the software. It's about the revenue model, because AI is going to change the number of people that need to use software solutions. The number of accountants that need logins for Intuit or for QuickBooks or for Xero or for any of these GL apps is going to go down, because headcount's going to go down because bots are doing more of the work of the people. So if you're making your money based off of unique users logging into systems, your share price reflected that this week. So the revenue models of the future are revenue models where we're paying for the outcomes that are generated by the bots. So if you think of it right now as, I need 5 users in QuickBooks or 5 users in Xero, and Xero is going to make their money that way. Now I'm going to instead, in the future, theoretically, pay Xero based off the number of books it closed for me, at what percentage of confidence level it did that closing. So it'll be sort of like a per unit delivery with a quality assurance layer of the revenue model. It's going to start paying for the bots like their employees or their outsourced workers, full-time equivalents, those are called. That means that this whole thing that Ron Baker has been talking about, sometimes when he was a prophet shouting into the wind 20 years ago, that people ultimately pay for outcomes, not inputs. AI is going to start value pricing us. They're going to start charging us on the outputs.
Yeah.
Interesting.
And Joe, it's so funny. I remember us having a conversation, and I've had this conversation with a couple of people that just kind of poo-pooed it, but I was thinking to myself, when I started using ChatGPT and helping me to, kind of really to help write articles, to help get my job done.
And do research.
And, doing the research. And what I realized was, yes, this is really making me super uber efficient. And my subscription cost is $20 a month. And yes. I hope that people out there are not basing their pricing model on their services based on that $20 a month.
Because it's delivering so much more than $20 a month. The value is, and I'm fine to be transparent. Exactly. That we don't have copywriters. I mean, we eliminated that role here at Woodard, so we're getting all that salary back. Now we still have editors. We still have people that review the research. So don't think we're just out there churning out AI stuff. It's real articles. We put real human effort against it, but we don't need the copywriter role. And so what's happened is it's displaced those user licenses on the part of our team. The salaries we get back in our pocket, and they're charging you $20 a month.
That's right. And it won't be like that forever.
It won't be like that forever.
So if you're basing your pricing model on that $20 a month, get ready, right? Because it's going to change. It's just a matter of when, right?
It's just a matter of when. And right now we're enjoying this, this sort of freebie phase until they figure out how to price it. But one thing's for sure, everybody knows it won't be the pricing of the past. And the markets, again, reflected that. All right, so now it's time for our 2 truths and a lie. We're going to try to stump each other. All right, Heather, I'll let you go first. You are so much better at this. I haven't been keeping score, but I think you're probably way out ahead. I think I may have only tied you once, and I've lost every other round. Yeah, but I've lost every other round. Okay.
I don't think that's true.
I think it is. Try to stump me again. All right.
Well, I know this is going to air after Valentine's Day, but mine's themed on Valentine's Day. So,
okay.
Because Valentine's Day is in 2 days. So thing 1, Americans typically spend more on Valentine's Day than Halloween. Okay. Thing 2 is Valentine's Day cards were first introduced by a chocolate company to boost February sales in the 1800s. And thing three is Valentine's Day helped drive one of the earliest large scale uses of the postal system for personal consumer mail because sending cards became so popular in the 1800s.
Okay, so first, I would seriously doubt that they spend. I would believe that Americans spend more on Valentine's Day than do on Halloween because spouses and significant others who are adults are more expensive than children. Candy's cheap. Okay, so I know Sandra's got her Valentine's Day present yesterday. It's a lot more expensive than a bag of candy. All right. So it was an empty bag, if that kind of gives you a hint. Nothing in it, but the bag was very expensive. Okay. So then, so I'm going to go, okay, that can't be thing one. That's true. That sounds true to me that they spend more on Valentine's Day. I think that the postal system's probably overrun on Valentine's Day. So I think thing two is probably true. I'm going to think, three, excuse me. I think thing two, that it was introduced by a chocolate company. I think that's wrong. I'm pretty sure that it was a greeting card company that invented this holiday. All right. So I'm going to say thing two is the lie.
So thing two is the lie, but not because of why. So you got
okay, I'll take the W. I'll still take
it. But so the first Valentine's Day card was, or the first known Valentine's Day card was actually sent, and I have to find it because I looked it up, was sent in 1415 by a king. And if I can find it, I may not be able to find it, but anyway.
While you're finding it, I was confusing Mother's Day and Father's Day with Valentine's Day because I think it was a greeting card company that created Mother's Day.
Yes. I think that you're absolutely right.
Valentine's Day does have religious roots. I should have known that. Yeah.
Yeah, no, but it was not that. The fact wasn't that it was created in 1415. I found it. But that cards, the practice of giving cards on Valentine's Day was started in the 1800s, which is also not true. So the earliest known Valentine's Day message dates to 1415 when Charles, Duke of Orleans, wrote a love poem to his wife while imprisoned in the Tower of London. And that was the first Valentine's Day card. So it's been around for a long time.
All right. So let me see if I can stump you today. And mine are all related to the profession. All right. So one of the big four accounting firms now employs more technologists than CPAs. All right. That's number one. Number two, several state boards of accountancy now allowed candidates to use AI tools during portions of the CPA exam, as long as the tools are disclosed. And number three, the IRS has tested using AI-powered chatbots to answer basic taxpayer questions during filing season. So I've got AI intersecting the accounting profession questions. Which one do you think is the lie?
Well, I'm going to start with thing three. And I think I recently read an article that the IRS has tested using AI-powered chatbots to answer basic taxpayer questions. So I think that's true. I highly doubt that state boards of accountancy are allowing candidates to use AI tools during portions of the CPA exam, whether they disclose it or not. I just don't think I just don't think they would do that. And I think that I'm a little like, of the big four, do they really have more technologists than CPAs? I'm going to say yes. So that's probably true. So I think it's thing two.
Thing two is the lie. Yes. Thing one sounds hard to believe, doesn't it?
It does sound hard to believe.
Yes. But if you think about the fact that at the end of the day, the only thing you need, only people that have to be CPAs are the auditors. And those are the ones that sign the report. Really up to that point. If you're going to represent the client to the IRS, then you have to be an EA or CPA. But more and more, it's technologists, non-credentialed. Think of it like a hospital. You know, there are very few surgeons in the hospital, but you have a lot of nurses and a lot of LPNs.
Nurse practitioners, PAs.
Yes, nurse practitioners, just a lot of different levels of worker there. So I think we're starting to see the big four kind of look like hospitals, and the surgeons are going to get, fewer and fewer farther between. Yeah. Okay. Did not stump you, but you didn't stump me either. So
No, it was a tie. It was a draw.
it's another
A draw.
tie. All right.
Yeah.
So now it's time for our member spotlight. And for the member spotlight, we have Kim Petro, one of our coaches over here at Woodard. Kim, who are we gonna spotlight this week?
Thanks so much, Joe and Heather, for having me back on the podcast. This time, we're actually going to spotlight Julie Healy and her team at ClearSense Bookkeeping. So one of the biggest shifts that Julie found in her business came when she stopped defining her ideal client purely by industry and started defining them by mindset. So she found her niche by working with people who are ready to make positive changes in their business. That's really the common thread here. Her best clients are curious, engaged, and willing to analyze their numbers instead of avoiding them. So they don't just want to be someone to, they don't want someone to just do the books. They want to understand what's actually happening in their business and use that information to make better decisions. So she's really enjoying working with women in the construction industry because it can be complex and fast moving and traditionally male dominated. And she's found that these women are incredibly resilient, resourceful, and proactive. They're often building businesses in environments where clarity, confidence, and financial insight really matter, not just for growth, but for credibility and sustainability. So she's found that her best clients want insight, not shortcuts. Sound familiar? They want to know why the numbers look the way they do. And they ask good questions and they're open to guidance, even when the answers aren't always what they expect to hear. So she's discovered that by working with these type of clients, there is no squabble over pricing because they know they're getting exactly what they want and often more than they expect. So this alignment allows Julie and her team to do their best work, where both parties are focused on the outcomes. Again, outcomes based, right? She says that really that's who her ideal client is. Someone who values the work, trusts the process, and wants to build something sustainable with her and her team. So I think that's just an amazing story that she has really developed that over time.
Well, it plays off of some of what Heather was talking about too. That feels like it has a soul in it,
100%.
Yeah, absolutely. It's if you spend the bulk of your day doing your profession, right? It should be with people you enjoy working with. So love that.
All right. Well, thank you so much, Kim, for bringing that to us. And congratulations, Julie, on building such an amazing practice with soul in it. Awesome. All right. Now we're going to move on to the Woodard Report article of the week. This is how we wrap up. Heather, what did you pick this week?
We had this guy submit this article this week, and it's a really great article. It's actually our best performing article for the last 90 days. So I'm going to have to tell him what a great job he did. So the article is "My daughter went to a TurboTax store and here's what's happened." And the author is Joe Woodard.
Oh, yeah. Yeah. Well, good. Thank you for picking my article. I appreciate that. I'm glad it's performing well, too. So
it is. Well, it's a great article. So do you want to tell us? I'm going to throw the spotlight.
So you're going to let me do it. I guess, yeah, I'd love to tell about it. So what I did, and I didn't know this is what you were going to pick till this minute, but this is what I did is there's a TurboTax store, the actual flagship store in Soho in New York, Manhattan. My daughter's dorm is just a couple blocks from there. And she mentioned that she had walked past it, walking here or there on campus. So I got this crazy idea, well, what if I just send her in cold, not knowing anything about taxes? My daughter is at NYU, but she's not studying accounting, folks. She did not want to follow in Dad's footsteps there. So she's studying marketing and graphic design. She doesn't know anything about taxes. She doesn't know what a W-2 is. I've always done her taxes for her before. So I thought, well, let's just let her walk in cold. And I did tell her to bring a W-2. So I gave her that one coachable moment. Otherwise, I just said, just tell them the truth. You're here to get your taxes done. You have no idea what you're doing. You're 18 now. Your dad's always done them before. And you want to take over and do them yourself. And she did. And the article kind of lays it out. I gave her an interview afterwards and kind of wrapped up what her whole experience looked like. I won't steal from the article. But the key thing here is Intuit didn't have any advanced knowledge that she was coming, any advanced knowledge that we were writing an article about it. They don't sponsor the Woodard Report or any of our Woodard Woodard functions in here in any way, so it's completely independent. And I had no way of knowing until I conducted the interview if my daughter's experience was going to be positive or negative. I just asked the questions and I let her answer. And if you're interested to know if it was a positive or negative experience, well, you're going to have to read the article.
I was hoping you were going to say that, Joe. Awesome.
All right. Well, this does wrap up this week's episode. Thanks so much again, Kim, for being with us. Heather, it's been great talking with you. We'll see you next time.
See you next time.